Investment management company T. Rowe Price has a compelling story. You won't hear much about the company, but T. Rowe Price has paid and raised its dividend for 37 consecutive years and has trounced the S&P 500 over its lifetime. But today, the stock is selling for a 50% discount, and that with a 4.35% dividend yield. T. Rowe Price is an investment management company that offers various investment products like mutual funds and ETFs, along with wealth advisory services. The company generates revenue from fees by charging a small percentage of its assets under management. The company has few expenses, which translates to favorable financials. As an example, T. Rowe Price converts about a third of its revenue into free cash flow, which allows a company to keep stacking cash since it has zero debt. Let's take a look at the charts. So now we're taking a look at a 20-year monthly chart on T. Rowe Price, and as you can see in the upper left, the symbol is TROW. And for disclosure purposes, I do not own any shares of T. Rowe Price at this time. Now, simply looking at the chart, you can see, and those of you that have been around know what I like, starting here in 2003 and running through the bottoms of these different drawdowns, you can see that it still has an upward move, with this being the lower base trend line all the way up to the current time frame. We have bottom and basing happening here, perhaps not unlike we had in 2009 at that point there. Now you will see that even though the price has continued on up in a stair-step fashion, as you perhaps can see, the current price here is not reflective as based on the oscillators. There's a divergence. Let's go to the oscillators. First, volume looks fine, but here, the MACD, you can see that this drawdown here was severe all the way down here, and we're still at a -10 level, plus or minus. Here in 2009, we were maybe half that. And back here in 2016, 2017, we were even less than that at those time frames. So a significant drawdown, yet the price continues to march up. I like that kind of divergence. And here's another one here in the histogram. Again, the histogram at -10, whereas way back here in 2008, 2009, it was less than -5. You'll see the same thing in these other oscillators, such as the price rate of change into the relative strength index, as well as the stochastics, and then of course the Williams. But all of them are starting to march on their way up toward the midline, or at -50 with regard to the Williams. Here in the stochastics, again moving on after that bottom and basing, heading on up. So you can see all of these look favorable currently, and I think they're going to continue. But as usual, you need to conduct your due diligence of the financials. But for the most part, this is a great stock to dig into. And remember, the risk is all yours. ChewDog out.